Okay, so welcome to a very important video in the series of the bootcamp. Now we are going to talk about the risk management for prop firms. And a lot of people get this wrong. A lot of people don't understand. And so believe me, I've basically put together one of the most detailed charts that you will be able to see, and this will tell you exactly with the formula what you should be risking on your prop firm challenge in your prop firm live account, because as I said, we are going to be mentioning the prop firm challenges and we are going to be mentioning funded accounts. So make sure to stick around. This is going to be a very good video. This took me hours to put together, and believe me, this is going to completely change the way that you look at prop firms, because you need to understand the number one goal with prop firms is to get funded and get payouts, right? A lot of people come into prop firms, and what happens afterwards is that they get either, they start risking way too much, meaning they just start purely gambling, or they risk too little, which makes it not be worth it at all. It isn't worth the risk. So there needs to be a balance between not risking too much, where it becomes gambling, and not risking too little, where it becomes just not worth it at all. But by then you would be better off going into your personal account, which we are going to talk about tomorrow. But the number one goal is to get funded and get payouts. And let me tell you that from the get-go, when you get funded, you have to treat the challenge way differently, because once you get funded, the potential to make money is there. And so that's where I will tell you, and you will see on the formulas, the approach is going to change when it comes to the funded accounts. And this is coming from someone that has made hundreds of thousands of dollars from prop firms. And I've tried, believe me, I've tried everything. I've tried 2% risk. I've tried even 3% risk on funded accounts, 1% and 0.25%, copying all of them, not copying all of them. I've literally done basically everything with prop firms. And so let's first start off with prop firm challenges, because prop firm challenge, this is where a lot of you are going to be in, a lot of you are maybe stuck in. So maybe this bootcamp completely helps you, because I'm giving you the strategy, I'm giving you the risk management, I'm giving you everything you might need in order to pass these prop firm challenges. And so let's go into the risk management for prop firms. So at first, we need to understand that the fundamental thoughts that we should have with challenges is that it depends on your skill, it depends on the time you want to spend on these challenges, and it depends on the risk you want to take about losing this challenge. Because all of these are going to play together, and we'll go through all of them. Literally, you will be able to go through a path and be like, oh, okay, this is me, and there you go, this is how much I'm going to risk. Because let's think about it. Skill. You're either a profitable trader or you are a beginner, right? Let me reduce my camera a little bit. So let's do this. Okay. So you are either a profitable, you are either already profitable or still a beginner. And then once you are profitable, you either never got any payouts or already got funded and got some payouts. So you never got funded or payouts, or you already got funded and got payouts. Then we have the beginner. So first, let's start with the beginner, because I know that this is where a lot of you are. Maybe you never got a payout, maybe you never got funded, and you are a beginner. And maybe you don't want to go for your personal account, you want to go for prop firms. And so this is where I would say that in terms of time, there's only one possibility, which is I'm taking my time. Why? Because I'm going to mention I want to get funded fast in the profitable section. But if you are still an unprofitable trader, I don't recommend you going for I want the challenge fast, because this is where it's going to lead into a lot of unprofitable habits, a lot of gambling. And believe me, I seriously don't want you to lose a prop firm challenge, lose your savings, lose money that you worked so hard for, to then just blow it on challenges because you didn't use the proper risk management or the right strategy. So if you are a beginner, if you have not proven profitability to yourself through backtesting, through hindsight testing, through live trading, I really recommend you taking your time. And this is where you should go for a challenge 1/4 of the size that you can afford. So if you are thinking, I can afford the 100K challenge, I would say go for a $25,000 challenge. Because once again, the risk that you are going to be putting up front is going to be less. You need to understand, when you are a beginner, losing streaks are more possible because you don't know the strategy. Getting emotional is more possible. And so with that being said, a lot of this negative cycle of gambling and losing all of your life savings can happen. And so this is where I really please, I beg you to listen to this when we're talking about prop firms. Go for 1/4 of the challenge that you can afford once you are still a beginner. So if you're thinking about going for a 25K challenge, go for a 5K challenge. If you're thinking of going for a 10K challenge, go for a 5K challenge, for the smallest one. If you are looking to go for a 50K challenge, go for a 10K challenge. If you're looking for a 100K challenge, go for a 25K challenge. Again, don't put all of what you can afford into one challenge. You really don't want that amount of emotion. And then the amount of risk that you are going to have is your max drawdown divided by 2, divided by the number of trades that you take per week. So for example, let's say that that the max drawdown is 10%. We divide that by 2, and then we divide that by the number of trades that we take per week, which means, let's say that we take 5 trades per week, then we divide this by 5, and you know that your average risk should be 1%. Do not go above 1% ever, especially if you are a beginner. Now, why am I not telling you to go for 0.5 or 0.25% risk? Because you are already buying a challenge 1/4 of the size that you can afford, right? So this is very crucial. The 1/4 of the challenge that you can afford is very important to then this be good. Because like that, it's going to give you the possibility to pass if you have a good streak. It's going to give you experience, and it's not going to be an emotional roller coaster because you're not going to be thinking, oh my God, I can't afford to lose these $500. Please, I need to go back. I don't want you to ever do this. If you ever come to a point where you are praying for the next trade to be a winner, you really need to size down. And I seriously urge you to do that. Believe me, I've gone through this. I've gone through this multiple times of wanting to pay for challenges that are way out of my budget. And it's not that I can't buy 10 of them. It's that if I lose $500 in 1 week, that's a lot. That's a lot. That's maybe something that you can save over a month. So you don't really want to be losing that in a week or in a month. Right? You want to give yourself time and experience, especially if you are a beginner. The reason why I say I'm taking my time, 1/4 of the challenge size you can afford, and the risk being max drawdown divided by 2 divided by trades per week is because it's going to give you experience, and it's going to give you and it's not going to give you too much emotion. But now let's go on to the other section. So after you watch the whole of the course, then there is the possibility that you will already become profitable in a couple of months. And then this is where, well, when I mean profitable, I mean statistically profitable, not in a lot of emotion. Be able to manage your risk, be able to manage your drawdown, multiple things. And so if you never got funded or payouts, or if you already got funded and got payouts, those are 2 different ways to approach it. So first, on the profitable one, if you are already profitable, but you never got funded or any payouts, then you either take your time or you want to get funded fast. But if you want to get funded fast, please make sure that you are not just saying, oh, I think that I'm profitable. If you are already profitable, you need to prove to yourself, yes, I am already profitable, which means it's okay if I want to get funded fast. Okay? Please keep that in mind. Now, for most of you, for 99% of you, I will recommend you taking your time. And if you are wanting to take your time, once again, you go for a challenge you go for a half challenge size that you can afford. Because again, you are already profitable and you are taking your time, which means you are profitable, you take your time, which means you let your edge play out, which means it's very highly likely that you are going to pass the challenge. So with that being said, the risk that you are going to take is also max drawdown divided by 2 divided by the number of trades you take per week. So the same thing as before, but where does it change? It changes right here on the size of the account that you are going for. Because in this case, if you are going for half the challenge size that you can afford, then all of a sudden you are entering with a little bit more risk up front, right? But then you are taking your time with the challenge. That is why it's okay if you are profitable and you're taking your time to go for half of the challenge size that you can afford, right? So that is it for the risk of if you are taking your time. Max drawdown divided by 2, divided by the number of trades per week. Now, if you want to get funded fast, then once again, you will have to go for a fourth of the challenge size that you can afford, because once again, you are taking the bigger risk up front, right? Or no, in this case, you are taking the bigger risk on the challenge, so you're not taking a bigger risk up front. You always need to balance between when you are taking the risk. Is it during the challenge? Is it in the payment, or is it in the risk percentage that you are taking every single trade? Right? So you need to balance these. That's what you will see that I'm doing here. I'm either balancing the size of the account that you're going for, or the risk that you're taking on the challenge. So if you want to get funded faster, or yeah, I'm even going to put faster. I'm not going to be putting fast. I want to get funded faster. So if that is the case, then you go for 1/4 of the challenge that you can afford, and then you are going to be risking max drawdown divided by 1.5 divided by number of trades you take per week. So let's say, another example, 10 divided by 1.5 divided by 5 trades per week. You're going to be risking around 1.5%. Let's say that this is 4. Yeah, it's going to be 1.5% per trade if you're taking on average 5 trades per week. Because again, this is going to make you be able to pass the challenge instead of in 10R. If you take 5 trades per week, which is here, if you take 5 trades per week, you would need 10R to pass the challenge. And right here, you would only need 10 divided by 1.5, which would be 6.5R. So you can see you don't need an extra 3.4R to pass the challenge. So that is why this is how I would approach it if I want to get funded faster. Okay, so again, reminder, this is for people that are profitable, never got funded or payouts, and are wanting to take their time or want to get funded faster. If that is the case, if you want to take your time, max drawdown divided by 2 divided by the number of trades you take per week. And if you want to get funded faster, the division is max drawdown divided by 1.5 divided by number of trades per week. Okay, so that is for if you are profitable and you never got any payouts. Now, if you are profitable and you already got funded and you already got payouts, then it's going to be different, because this is going to be broken down into, once again, I'm taking my time and I want to get funded fast. But once again, this is going to be different given the fact that you already got funded and you already got payouts. You are already profitable on the whole prop firm game. So because of that, you can afford a little bit more risk. So you go for a challenge, have the size that you can afford in both of them. But the difference is on the one that you are taking your time, you're going to be risking max drawdown divided by 1.5 divided by the number of trades per week. So again, same thing as if you want to get funded faster, but you are not profitable. But if you want to pass faster, so once again, let me quickly change this to faster. Then you are going to be risking max drawdown divided by 0.8 divided by the number of trades you take per week. So once again, 10 divided by 0.8 divided by 5 is going to be risking 2.5% per trade. But again, keep in mind, this is only for traders that already got payouts, already got funded, right? Because you already have backup. You already have maybe other funded accounts, you already got a payout, you already got funded, so you are profitable, meaning you are profitable overall in the prop firm game, so you are able to take a little bit more risk. That's why the 2.5 is here, the 2.5% risk here in this case. Why? Because then you'll need 4R to pass and get one more funded account, one more possibility of making money. So for example, for me, right now, you need to understand, at this point, after making hundreds of thousands of dollars with prop firms, I don't really care if I lose one more challenge, because my goal is I want to get funded, Because if I get funded, I have one more account that gives me the possibility of getting paid out. And that's the only thing I care about. I don't care about one more challenge. But once again, notice the path that we are threading, right? We already went from beginner to profitable to never having a funded account or a payout to already having funded and payout. So this is you need to take your time with this, right? You can't just jump onto this because this is where you are going to blow a lot of money. And I think I really don't want to have to make this thing every single video, which is please do not try to flip accounts. Do not try to gamble your way through a challenge. You will lose. Prop firms have factored all of this in. Believe me, prop firms have factored the fact that a lot of people are going to try to gamble their way through the challenge. It's all already in the game, right? It's already priced into the price that you're paying. So you really need to follow these guidelines because I don't want you to lose. I know, why do you think I've never started a prop? It's because I knew that it was always going to be a conflict of interest with the people that are watching, right? So I would rather give you the tools of like, hey, do this and rinse them, take advantage while they're here, than being on the other side. If I was on the other side, I wouldn't tell you how to be profitable. I don't want you to be profitable in that case, right? So when I tell you this, I am being dead serious. Please follow these guidelines. If you are not profitable yet, do not risk a lot on the challenges. You will lose. Prop firms can be your ticket for freedom, but first you need to be profitable. Okay? So let's go back. Again, this gives you the perfect examples of what to follow if you are not profitable yet, if you are already profitable. So follow this follow this yourself. This is going to be available for everyone. Follow this yourself and find out what the formula is for how much you should be risking, right? This is going to give you a lot of leeway to make mistakes during the challenges. It's fine to make mistakes during the challenge because then you have to surrender to time. Because trading, it's about surrendering to time, of not wanting things now. It's about letting the market play out. Take your trades. Take your 1 to 2, your 1 to 3, take your 1 to 1, 1 to 2, 1 to 3. Right? Today, entered in a trade on euro dollar, boom, profited 1 to 2. It's just base hits consistently, boom, 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 consistently base hits. That's all that I want for you. I don't want you to blow yourself, right? I don't want you to blow accounts like that. So let's continue now with the funded accounts. So on the funded accounts, the idea is going to be the same, right? The idea on the funded account is going to be very, very similar. Let me do this. Okay. The idea on the funded accounts is going to be very, very similar, but the fundamental thoughts are going to be a little bit different. So it's going to be based on skill. It's going to be based on the number of funded accounts, and it's going to be based on the consistency of the payouts that you want to get. But obviously, first of all, always comes the skill. And that comes from maybe you never had previous payouts, right here, you never had previous payouts, or you have had previous payouts, right? So you either, once again, let me repeat, you either have never had previous payouts or you have had previous payouts. If you haven't, then I want you to ask about the consistency. Do you want consistent payouts or do you want bigger payouts? If you want bigger payouts and you've never had a payout, a previous payout, then I want you to rethink why. Why is it that you want bigger payouts? Are you just trying to get a home run, make money and leave? Or do you want to do this long term? Most of the traders that I know, they've did this long term, and that's why they've made so much money with prop firms. I don't think bigger payouts are good if you have never had previous payouts, right? So if you want bigger payouts, then I want you to rethink why and maybe watch the previous videos and understand why that is not the right thing to go for. Rewatch the video of thinking like a trader. You need to understand this is a long-term thing. You can't just be wanting to get one big payout and then just go into the cycle of challenge and blowing challenges again. Once you are funded, the number one thing is have consistent payouts. Have consistently money hitting your bank account. That is the number one goal. So now let's talk about getting consistent payouts. So this now depends on the number of funded accounts that you have. So if you have one funded account, we will have one specific risk. If you have 2 to 3 funded accounts, we will have one specific risk. And if you have 4 or more funded accounts, we will have one specific risk. So if you have one funded account, then I would recommend on the live accounts risking max drawdown divided by 4 divided by the number of trades per week. And yes, you are not going to be risking a lot if this is the case, but you are going to be able to have low amounts of emotions and you will be able to have consistent payouts. They are not going to be large, but they are a proof of concept. I had one student once ask me, hey, Kimmel, listen, I have a $100 payout that I can take, but should I take it or is it too little? And I was like, there is no payout that is too little. Let me repeat. There is no payout that is too little. I don't care if it's a $50 payout, if it's a $100 payout, if it's a $10 payout. It's proof of concept. It's proof for you in your mind that you can get money from the markets into your bank account. That's what that is. So if you are able to risk a little bit less on the funded accounts, you will be able to reduce extremely the risk at which you can lose the funded accounts, which again, I need to remind you, funded accounts are different because now you can make money. With funded accounts, you can make money. So losing a funded account is losing the possibility of making money. Especially if you haven't had any payouts, you need the proof of concept. What I am doing works. What I am doing is putting money into my bank account. Even if it's $10, $50, that's one supermarket, right? You go to the supermarket one time after withdrawing $50, all of a sudden you have 1 week of expenses paid for. Or let's say $100, $1,000. $1,000 is probably what you spend in a month. Can you see the power of a funded account? The funded account can pay for your lifestyle. It's not going to buy you the Ferrari. It's not going to buy you the Lambo. But first, you have not gotten payouts yet. So with that being said, I do recommend max drawdown divided by 4 divided by the number of trades per week. If you have 2 to 3 funded accounts, then the risk that I would recommend is max drawdown divided by 2.5 trades per week max drawdown divided by 2.5 divided by the number of trades per week. And then you are going to be rotating accounts. So you are going to do this on one account. You are not going to be doing this on all of the accounts. Once again, you are going to do this on one account, not multiple. Because again, like that, what is the goal of rotating the accounts? The goal of rotating the accounts is, once again, proof of concept. Okay, boom, I got a payout. No, I got profit. Okay, boom, lock this account in. It's done. This is going to give me the profit split. Now, next account, boom, profit a little bit. Lock that in, going to the next one, going to the next one, go back into the first one, right? These rotating the accounts is going to be extremely, extremely good for you to consistently get payouts from prop firms. Because if you are not doing that, you copy between all of them, you will enter, like if you enter in a little bit of drawdown, you're in drawdown in all of the accounts. And I don't want that for you. I've been there. And it's not nice. I don't like it. Okay? So once you have 2 to 3 accounts, max drawdown divided by 2.5 divided by the number of trades you take per week. And then once you profit, again, you might profit only 1%, maybe only 0.5. Lock that in and move on to the next account. And then you do the same. And if your first trade is a loser, that's fine. Continue trading the account, same risk. And then boom, once you profit, you go on to the other account. Always like that. Always lock in the payouts. This is going to completely remove the stress that you have from having all of your accounts in drawdown, of not getting consistent payouts. Again, the goal is consistent payouts. I want consistent payouts. I want you guys to have consistent payouts. This is the best way to go about it. 2 to 3 funded accounts, just risk max drawdown divided by 2.5 divided by the number of trades per week, and then you rotate the accounts. Now, if you have 4 or more funded accounts, then the risk that you are going to take is max drawdown divided by 2 divided by the number of trades you take per week, and then you are going to rotate the accounts. Again, if you take 0.5%, if you take a 1% trade, 1% profit, you lock that account in, you move on to the next one. Why? Because like that, listen, you're going to be in one account, one trade that is profitable. Okay, park that one. You already are getting a payout. Go on to the next one. You take 3 losses in a row, and then you take 2 winners that take you into 1% profit, lock that one in, go into the next one. So now not only have you had a losing streak that did not affect you because you had so many other accounts, but also you were able to lock in a payout either way. So with that being said, once again, if you have one funded account, you are taking this. Well, basically, these are all the equations for depending on the number of accounts you want and you wanting to consistent payouts. And again, this is coming from someone that does not have previous payouts. You want to consistent. Believe me, payouts are proof of concept. That's what you want. You want proof of concept. And by the way, one of the issues of people going here and saying that they want to get funded fast or buying challenges that they cannot afford, they usually then just go into bad prop firms because they have better price. You need to go for good prop firms, by the way, right? Just keep that in mind. So if you're not funded with FTMO, you should be funded by FTMO, especially if you want to go full time. If you're not funded by FTMO, you should be funded by FTMO, and then Fivers. And then, I don't know, at least FTMO and Fivers already give you a good maximum allocation. So again, this is the ratio that you should have. These are the equations that you should have in order to find out what risk if you haven't had consistent payouts. If you haven't had previous payouts and you want consistent payouts. Now, if you have consistent payouts, if you have had previous payouts and you want, let me think. Well, let's talk first about consistent payouts. I believe that this is the best way to go about it either way. So let's talk about it. For the number of funded accounts, if you have one funded account and you want consistent payouts, again, max drawdown divided by 4 divided by the number of trades per week. Don't take too much risk. Doesn't matter. Just keep on getting the payouts, right? Now, if you have 2 to 3 funded accounts, then max drawdown divided by 2.5 divided by the number of trades per week, and then you rotate the accounts. If we have 4 or more funded accounts, then it's going to be max drawdown divided by 2 divided by the number of trades you take per week. And once again, this is all, you can see that this is basically the same as if you haven't had previous payouts that we have right here. Why? Because once again, this is all about consistent payouts. And I really urge you, you should want consistent payouts. Believe me, I've had consistent payouts. I've had big payouts. My biggest payout was like over 30 grand. But again, it included a lot of emotion in between, because you see a trade running 20 grand, then pulling back to 15, and you think, oh my God, I should have locked in profits, blah, blah, blah. Believe me, it takes an emotional toll. But if you want a bigger payout, it depends on the number of funded accounts that you have. And again, this is if you have previous payouts. If you have not had previous payouts, then you should not want bigger payouts. You need proof of concept. But if you only have one funded account and you want a bigger payout, then the risk you should be going for is max drawdown divided by 2 divided by the number of trades you take per week. Then 2 to 3 funded accounts and you want a bigger payout, then risk is going to be max drawdown divided by the number of trades you take per week. And then once again, one trade that you profit, you rotate the accounts. You move on to the next one. Now, last but not least, if you have 4 or more funded accounts and you want to get a big payout, then you're going to do max drawdown divided by 0.8 divided by the number of trades you take per week. And yes, this means that you are going to be taking big risks on the funded accounts. And you have to be careful. You should be doing this on a better prop firm, because if you take a big payout from a bad prop firm, they will ban you. And you don't want that happening either way. So with that being said, we covered a lot. And so what I urge you to do is now checking, okay, risk management. If you ask yourself, how much should I be risking? You go through this diagram. It's going to be available for everyone. Risk management for challenges, what your skill is, if you are a beginner or if you are profitable, what time, or if you never got a payout, or if you have gotten a payout. If this is going to, all of this is going to be giving you the formula for it. So with that being said, use this to your advantage. This is like the most into detail that I've gone to. And this is a 30-minute video. And I really recommend you rewatching this if needed. Watch all of my reasonings for all of this, all the reasons for all of the equations. And from there on, you make your own decision. Believe me, I've done this. I've done this a lot of times. And for me, this has been the best that I've come up with. This is the best content that I've posted in a good amount of time. So with that being said, I hope you enjoyed, and I'll see you tomorrow. Peace. Hope you enjoyed this lesson. Click right here to watch the next one. And if you are struggling with overtrading, then click right here to check out Trade Blocker. Peace.